What's up guys, Dirk here. Happy Monday. So I just want to do a quick update on the weekly chart since the candle has just closed. We'll go through Bitcoin, Ethereum, and maybe the S&P 500 too. So welcome. If you're new to the channel, subscribe down below, click the notification bell. If you want to get on my email list, it is the first link in the description down below. And if you enjoy these videos, I would appreciate it if you share it on social media and just click that thumbs up button to help the video get out to more people. So let's start out with a Bitcoin over here. So this is the weekly chart. You can see Bitcoin is back under 20K, 19,775 is the current price. And we just had a weekly close. You can see, let me zoom in here. It's actually that very tiny little green close. So there isn't much that has happened at all. This isn't very telling. It's just basically non-big activity week, okay, and it doesn't really say anything because we've still closed below the 200 week moving average. So that weekly candle, we're still in a bearish trend here. Basically what it comes down to is we either need to reclaim this 200 week moving average again, which is currently about 23,300. So to get more bullish on Bitcoin again, we need to close back above 23,300 with a weekly close. Until then, the risk of breaking down to this $10,000 to $14,000 level is still very much a possibility, and we are still in a bearish trend. The stock market is bearish. Today is a holiday in the US, so the stock markets in the US are closed. So today might be a bit of a boring day, but since we're looking on the weekly chart, you can see over here how this price action here is just hovering on this previous 2017 all-time high, this $20,000, $19,500 level. You know, it was the all-time high back then, and we are sitting on that. But in the same way as here in 2018, the longer that you sit on a horizontal level of support without getting any major bounces, the more likely it is to break down, which eventually happened here at the end of 2018. We got that 50% sell-off for the final capitulation. And you can see over here, we've been sitting on this $20,000 level, 19,500 for quite a while, and in my opinion it is just a matter of time before we do break down and potentially get that 50% sell-off, which would take us somewhere between $10,000 and $14,000, which would be this fair value gap. So unless we get a close back above this 200 week moving average, my target and my guess is still to complete this move to the downside would be somewhere between 10 and 14,000, and that could very much happen or start to happen really this week. It really depends how the stock market's open tomorrow and what happens. But I've been saying September is this risk for a crash or a further sell-off. So we're gonna have to wait and see how that plays out. But I do think the odds favor more downside. If we look at Ethereum, not much of a difference. It is a little bit up. We had a little bit more of a green week over here than we did with Bitcoin, but still it is a pretty small week. 1,563 at this point. We got rejected here at this $20,030 level, the same high over here. We have the lows over here, just about $900, just under 900, and we have the 200 week moving average sitting here at about $1,280. So with Ethereum, we do have the merge coming closer and closer. That is supposed to happen on the 13th, which could potentially be next week already, but we don't know. Are there going to be delays? Are there going to be errors? Are there going to be technical problems? So all of that still remains to be seen. Another theory that some people have is that they think there's going to be a fork of Ethereum. Once it moves to proof of work, or proof of stake, someone is going to fork Ethereum and relaunch it as a proof of work chain, and there's going to be an airdrop. So some people are speculating, people are still buying or holding on to Ethereum to wait and see if that airdrop launches based on the snapshot, and after that they might sell off and we might get a major dump after the merge. If that even happens, it could already sell off before the time. So with Ethereum, similar principle. Unless we flip this 2030 level and we get back above there with the weekly close, then we can start to consider getting more bullish for more potential upside. Until then, we've clearly been rejected. The market is still in this downtrend, and we have to wait and see, is it going to retest here the 200 week moving average around 1280? And if that breaks, probably looking at a retest of the lows under $900. And if that really breaks, if something goes wrong with the merge, or there's another black swan event, or whatever happens, we could potentially see much lower than this $900 level and maybe go back to retest somewhere between $300 and $500 in a worst case scenario. So let's see how that plays out for this week ahead. Then a quick look at the S&P 500, which also basically has had 3 red weeks in a row. It got rejected from the 50-week moving average, which is bad because if we go back to 2008, that is exactly what happened here on this bear market rally. It got rejected by the 50-week moving average, then sold off. It got back below the 200, retested it from below, and then we had the major global financial crisis. So this is not looking too good for the bulls right now. We had this sell-off, we had this bear market rally rejected by the 50-week moving average. Right now, the bulls' hope is basically that this 200 moving average is going to hold, or that it's not even going to get there. If it does get below this 200-week moving average, we have to really start to consider that there might be a repeat of 2008 and much lower to go with another potential major global financial crisis. But until that happens, we are still in this phase where for further bullish upside continuation, we have to just flip this 50-week moving average. So we have to get back above the 50-week moving average, and then I think a lot of people will flip bullish, and then there is potential for a run back to the all-time highs and maybe even new highs. But until that happens, we're probably targeting the lows once again, maybe slightly below it, probably this 200-week moving average. That could still happen quite potentially this month, and then we have to wait and see, do we close below this 200-week moving average or not? That is going to be very telling because you can see how much it has been defended in the past, right? We got here and a bounce, got here and a bounce. This was the March 2020 sell-off, so that was a fake out simply because there was lack of liquidity and so much fear, and it just shot down, but it rebounded very quickly. But in general, we are looking for this 200-week moving average to hold if the bulls want to have a chance. And obviously, needless to say, if we do get another major sell-off and we go below this 200-week moving average and the stock markets repeat 2008, it's very likely that crypto is also going to go a lot lower still. And then finally, something that I haven't looked at in a while is the US dollar index, which is basically doing the opposite of what the markets are doing, or the markets are doing the opposite of what the DXY is doing. Basically, the stronger the dollar index gets, the lower the stock market and crypto goes. That has been the inverse correlation. That has also been the case. I've made a dedicated video about this in the past. Basically, when the dollar index goes down, we have our bull market in crypto, and when it goes up, we have our bear market, and that is still very much the case. So the dollar index is now, it actually hit 110 already on the index, so it's been higher than both the peaks in 2017 and over here. And both these peaks actually mark the exact start of the previous 2 bull markets. So I think we could continue to keep an eye on this and see that when it does eventually top and create a peak like it did here, like it here, once it reverses, we could be looking at the next start of the next cryptocurrency bull market. But until that happens, as long as this continues going higher, it is likely that that inverse correlation continues to play out and that the crypto markets continue to go lower as long as the DXY goes higher. And here we have to see, we are maybe here in a blow off top situation where the DXY, the dollar index, could get a lot stronger in the last legs up, as you can see over here, continue to get these big movements to the upside, although things are starting to get a little bit overextended on shorter time frames. We are starting to see negative divergences here. We're starting to see larger extensions away from the moving averages, which means, we're going to reverse at some point. The question is just going to be, how high are we going to go? You can see over here, we've just taken out any stops above this level or the liquidity over here, but we could still go, potentially we run a double top, potentially this goes to 120 in a massive blow of top and a quick reversal, and then everything turns around. That is a possibility. So let's keep an eye on this week by week, month by month, and keep an eye on when this ends up topping or showing signs of reversal, because that is going to be a very good potential indicator of when the crypto market and the stock markets are going to bottom and start their reversal to the upside. So if you enjoyed this video, please subscribe down below, smash that like button, leave a comment with your thoughts. What do you think is going to happen? How much lower are we going? How much higher are we going? What do you think lies ahead for September and for the next couple of months? I would love to know. Leave a comment down below, and I will see you in the next video.